Good morning and welcome back to Almus Market Mornings. For a change, this time the meeting between President Zelensky and President Trump ended in smiles. Overall, it seems it's taking a positive direction. US will cooperate with Europe for security in Ukraine. At the same time, a possible trilateral meeting between Ukraine, Russia, and US is possibly being arranged. There was also the meeting between the foreign ministers of India and China, both looking to mend ties. Markets broadly remain in a range, some mild strength being seen in the dollar overnight. Gold remains subdued, while yields in the Western markets are slightly higher. Indian stocks had a good show yesterday. Good morning, JK. Things geopolitically are progressing. What are we making out of these developments? And when it comes to the rupee, we are seeing the pressure ease a bit. What's your take?
Good morning, Swaraj. So we are seeing high-level diplomacy and geopolitics that's actually now seeing some sort of a positive development, particularly in the Russia-Ukraine war. And the very fact that almost all the names of European leaders who matter were there along with Zelensky at White House indicates, there's something really brewing in terms of getting a positive outcome. In fact, I have seen the direct telecast of the press conference where European leaders were quite, you know, clearly asking for a ceasefire and security guarantee for Zelensky, or rather Ukraine. And President Trump was actually, yes, he was not saying anything, but he was acknowledging what they were demanding. Ultimately, what it transpires is that their demands are probably not what Putin has already agreed to, and that is why there is a meeting that they have, they are arranging between Putin and Zelensky. Perhaps Mr. Trump will also be there. So overall, it does look like we are somewhere progressing towards eventual end to, or maybe a long drawn peace agreement. But then it does definitely look this time a much better positive outcome that we can look forward to. So, and yes, markets are of course still waiting for the final outcome. So we are not still seeing any major movements in the market also. The other point of focus for the markets, of course, is in the absence of major economic data, market has been speculating on how the Jackson Hole meeting in this weekend will go, because this meeting is happening at a time when there is a huge divergence between the politicians and the central banker on where the rates should be. For instance, the Treasury Secretary looks forward to a 50 basis point rate cut in September, and in fact, he also looks forward to a series of rate cuts up to 1.75%, whereas Powell so far has held that the economy is been strong, and the impact of tariff on inflation is yet to be felt. So that is the stand he has taken so far. And while markets, on the other hand, are actually more than 90% seeing 90% probability of a rate cut in September and two cuts this year. So how all these things are going to reflect in the Jackson Hole meeting is a very interesting thing to be looked forward to. And key thing is Powell will have to see again as answer for himself, and perhaps for the markets also, or tariffs really having any impact on inflation, because barring the PPI which we saw so far, we haven't had any major impact on the retail inflation. Job market weakness, he has to acknowledge, because we have seen a huge revision in the job numbers. And then, of course, there has been a divisive vote in the previous meeting, and perhaps that's going to get even more divided in the upcoming meeting. So, amidst all this, what will be the view of the Fed chairman on rates? That's what the market is looking ahead to. And perhaps I will not be surprised. Like last year, in August was when he said that the rate cuts were coming, and this meeting may not be in such a categorical term, but I definitely foresee some change in his language, because not because of the political pressure, because conditions have also somewhat changed. Of course, before the next FOMC meeting, we will have one more inflation number and one more jobs number also. That's the point of attraction for the market. Um, and there was some, of course, across the Atlantic. We had this eurozone trade data, which showed a big drop in their trade number, trade balance rather. And it showed that, perhaps the recent high numbers were due to two reasons: the tariff, front loading ahead of tariff, and then some backlog supplies that were seen. But it does look like, after the tariffs have been imposed in the last 2 months, the activity level has come down. Industrial production also, we saw that it has dropped, and the trade number has come down substantially by by 12 billion in the last month. And that shows that perhaps the both the factors of euro strength and the tariffs are having an impact on eurozone exports. Eurozone is as a economy depends heavily on exports for the growth. And if currency is one of the factors, I'm wondering whether the Europeans will resist further strength in the euro at this point of time. So that's a point of interest for the markets as well. So in the currency market, of course, we did see once again a range trading market. Euro and yen, all of them, trading perhaps with less directional sense, and perhaps the outcome of peace talks can lead to some sort of a movement there. Even the oil has been moving in a narrow range. Gold seeing some sell off from the highs, but then nothing meaningful. So people are sitting on their hands, waiting for some new developments. And we don't have too much of data, of course, even today. But going forward this week, we have the Japanese and UK inflation number. And then, of course, the preliminary flash number on the PMIs from various regions. These will be some data to chew upon, but definitely Jackson Hole will be the top on the list of market watching. Uh, and of course, though we do not have major economic data, we also have some numbers from major retail companies in the US, and that's important because their sales number will reflect whether the tariff induced uh, higher prices are affecting the sales at the company level. Is So that is something of interest for the market. So a dollar will definitely continue in the range at least for the next couple of sessions. And we'll wait for outcome of the Jackson Hole meeting, perhaps that, and the geopolitical developments. On the rupee, yes, as you said, we did have a slight gap down in the USD INR, and closed also lower by about 0.3%. Uh, uh, I can't put it directly towards the any particular factor. I think its market is slightly looking at some of the positive developments, like the upgrade, and then the GST revisions, possibility of the Ukraine-Russia war ceasefire. But then we should remember that despite all this, the 25% tariff on India is not going to go away easily, and that's a challenge that India will have to face in the coming days, unless we see some major policy measures which offset this impact of this on our exports. I think rupee will not be seeing any major strength. And of course, unless we see major weakness, renewed weakness in the dollar. Upside, of course, is capped by RBI. So again, rupee 87, 88 range should be very much on the cards. In fact, a narrower range is what I'm looking at. But staying on the rupee, I also feel that with the recent proposed cut in the GST rates, it can lead to a further fall in our inflation, and further fall in the inflation number because of the tax cut. may prompt another rate cut, or maybe a couple of rate cuts from RBI. This is what even I gather from some of the well-known analysts also. So that's something as far as Indian market is concerned. We look forward to the prospects of further inflation and rate cut, as well as what happens to the dollar index will be key. If the dollar index strengthens from here, I would not rule out dollar rupee also going towards 88, particularly in the context of higher tariff that we are facing. Thank you.
Thank you, JK. And as you mentioned, geopolitics is seeing some positive developments. We had the top European leaders, along with Zelensky, meet President Trump at White House, trying to secure some sort of a security deal. At the same time, in the face of lack of economic data, markets have been speculating about the Jackson Hole meeting this weekend. We have the central bank, which is a cautious on inflation, and governments, which is encouraging more cuts. So that divergence, markets will try to reconcile. Eurozone trade data showed a big drop in the trade balance in July, but broadly currencies were largely in range. When it comes to economic data, this week we will be looking forward to the Japanese and the UK inflation, along with flash PMIs for various regions. Rupee strengthened yesterday, but unless we see some major policy measures, 87, 88 range should hold. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.